the board of directors here really did a smart thing, which you don't always see. They did get rid of the longtime CEO and got a workout guy in, and that gave the FDIC comfort to let the bank continue to survive.
On this episode, we talk with Dave Lamb of Michigan's Oxford Bank. Dave shares his experience of coming into a troubled community bank from a large bank background, executing a turnaround and exiting a consent decree, and how culture, product mix, and experience all played a role in the eventual success of that effort. Oxford's story provides a great case study in leading through change. Enjoy the episode. With us today is Dave Lamb. Dave, thank you very much for being with us.
Thanks for having me, Rich. Really appreciate it.
So Dave, why don't you tell us a little bit about your background and where you came from and kind of how you came to work at Oxford Bank?
Yep, I'd love to. So like a lot of community bank CEOs that I know, I came from large banks. I worked at a bank in Michigan, NBD Bank, which was acknowledged one of the best commercial banks. I worked for Fifth Third Bank, which was at the time was very widely acknowledged as one of the best sales banks. And then at that point, I thought I would like to do something entrepreneurial. And I tried something entrepreneurial outside of finance and banking, actually importing furniture from the Far East. And I realized quickly the advice I would give to clients is, if you're going to go into a business, you have to either be all in or you shouldn't be in at all. And so I thought, well, what am I reasonably good at? And there was banking. So the only place to go really is community banking if you want to be an entrepreneur. So I went and worked for a client who owned a good sized financial planning firm. We went and bought a bank at the worst possible time. I think we closed on it 2010, did all the due diligence and got approvals in 2009. Not a great time, but it worked very well for us. So I did that for a while. And then the opportunity came up with Oxford. Oxford was in a not a very good condition. They'd been under a consent for 7 years, which is a really long time. And the board of directors here really did a smart thing, which you don't always see. They did get rid of the longtime CEO and got a workout guy in. And that gave the FDIC comfort to let the bank continue to survive. And also, the bank has been around for so long because the community is very supportive of the bank. And that's so important, right? To keep your liquidity. And so, yeah, I came here. I had a lot of refugees, I like to call them, from large banks who wanted to do something around relationship, experience. And I recruited a whole bunch of people, and we went from there. 2015 is when I came here.
So were you specifically looking for like a turnaround opportunity or something where, they were kind of looking to make that change?
Yeah, so it's absolutely right. So I wouldn't have wanted to go to somebody like I like the startup that I did with the other firm. And then this was, I always say it was like a startup, except we had, 260 million in assets. But I wanted that because if you go to me, this is just my way of thinking. I'm not saying it's right or wrong. If you go to a bank, a community bank that's, doing okay, I have to imagine there's a lot of sacred cows there that you don't want to, there's things that you won't be able to do. But here it really was a blank canvas, right? They were ready to get out of the consent, and they literally got out of it a month after we got out of it a month after I joined. We raised some capital, and yeah, so I wasn't looking I wanted to do something that would be really interesting, and which is grow a bank and grow into a high performing bank, frankly.
So you have to kind of look at it from like a business strategy standpoint. There's always that subtle difference between, are you in a turnaround situation or are you in a realignment? And it's often the speed at which you have to act, depending on which. I know you were looking for something like that, and that was interesting, but What was like on your agenda at the beginning? What was the most important things that you kind of did in those first weeks or months?
So it's an interesting thing. What I thought is I need to really I wrote like a 25-page business plan before I came here and thought, what are the things that are important to me? What will be important to uh, be successful and actually be sustainable at the same time, like survive? I mean, I'm coming to a bank that's turned 140, so I was certainly aware of that. Um, but it really was. I knew first thing is I had to set a real culture with the company, and you're right. Is it a turnaround or a realignment? I think it's kind of a combination of both. But I knew I had to. We had to have a good culture. So it was. I did that very early. I came up with the cultural principles that I believed in, and a lot of people who wanted to join me that they believed in, because people have to know what you're coming to do and how are we going to operate this organization. So it really was culture first, and I did it almost immediately.
So this was 2015. We're just a handful of years into Dodd Frank at this point. Um, Probably at the very beginning of kind of this coming tsunami from a fintech standpoint. So
Yeah,
you're sitting at, you said it was about a quarter billion in assets at that point.
yeah,
And were you publicly traded then?
we were. Yes. I think at one time they had flirted with the idea of going full SEC. We're not a full SEC shop, but we are publicly traded. And they were, I don't know exactly when they became publicly traded, Rich, but um, we definitely were.
And so what, once you kind of got into, let me get the right people in the right positions and set the operating principles, what was kind of the path at that point? What were the things that you were kind of engaged in that maybe after putting out all the fires, from a regulatory standpoint?
Yeah. So the big thing is what I knew I wanted to do. And I have to thank like a very junior investment banker who called on me when I was at the former shop. I'm a CNI lender, commercial and industrial lender by experience. I mean, I've been in management a long time before that at the large banks, but I knew CNI lending is one thing that makes you more valuable versus not doing it. And I knew it very well. That, and I also was a very big believer in deposits. It stuck with me forever that the only reason we put up with all we put up with to have with regulators and just in general is because you got that license to get deposits. So I knew our focus was going to always be CNI, and CNI is complementary to that because you are going to get more deposits from commercial and industrial companies than if you're just doing real estate loans, and to focus on deposits. So that was the two things that were top of mind. Some of the implementation, I did a lot of training. That they were on a model where, well, the first day I was here, I went to every branch. Didn't tell anybody I was coming there. I started on a Friday because I had to start on the first for some reason. And I went to every branch first, went in, and I would walk in the door, Rich, and the first thing they would say, would you like a credit card? And that is not the way to have a relationship or market to people. Just assume whoever it is. This is what you're basically saying. This is what I want to sell. And I'm not really interested in what you need. I just what I want to sell. So I was I knew we had a sales issue, really a relationship issue, because I think sales is all about relationship. And so immediately, literally the second week, I started having classes with the personal bankers about like needs based selling, not selling to not the product of the day, which that kind of it might sound like I'm criticizing large banks. I'm not. They've gotten large for a reason, so they're very good at some things and been very successful. But we we're never going to say, okay, the only things I want you to sell this week are credit cards, and see if you can work that in, however you do it. And I knew that wasn't going to be successful for us. So those were kind of like the big overriding strategic principles.
So at that point, you had 7 branches. I think was that your footprint then?
I I have to think for a second. I think we had 8, Rich. We
Okay.
had one that was very close, and then we had 2 that had been open maybe in the last 5 or 6 years, and the other ones
Hmm.
were like they're 60 years old.
Right.
But unfortunately, they opened them like in '06, and they got the consent in '08. So these brand new branches that we built had to go on reduced hours, and I think
Hmm.
towards the end, they were literally open Friday afternoon. Now,
Hmm.
this is a new branch, not being
Yeah.
open other than Friday afternoon,
And you start thinking
and
about the utilization of that from an
yeah,
investment standpoint. Okay.
yeah,
All the
I
wins
think it.
against you, right? But your
Oh,
your footprint here is you're in Oakland County,
yeah,
Michigan, right? That's kind of the focus. So
yeah,
the expansion into CNI, at least at that point, probably made a lot of sense from
yeah.
who you were able to reach out to and touch. So how did that play out? How did that play in what the next decade since has looked like?
So everybody who I hired had big bank experience to start. They were all so we had a lot of clients who also were ready to work with a different kind of bank. So we really worked on those clients as much as anything. And so we covered, if you're doing CNI lending, you can't just say, well, we're just going to do it within our branch footprint. So we've always covered the whole metropolitan Detroit area. Where we are in Oakland County for sure, which has always been one of the wealthier counties and a really vibrant business county. We are on the northern end of it. So I like to tell people the border to where rural Michigan starts is about 6 miles away. So it's definitely it's a kind of a cross between a rural, some of our branch footprint, but more built up than you would see in a rural market.
So what percentage of that is your business now, from commercial to personal, roughly?
We are so deposit wise. I always focus on the deposit more than the
Sure.
loan side. We are about half business deposit and half personal deposit.
And what did that look like when you came in? Was it about that mix, or was it a lot less, I'm assuming,
There
or
was a
much
lot less,
heavier on the personal side?
much heavier on the personal
Yeah.
side. So they had on the business lending side after they kind of got the okay, they could actually lend some. They were just basically buying loans, investment real estate loans from brokers. Yeah, and
Got it.
they weren't doing that many of them, and yeah, so it fundamentally changed. It probably would have been 90-10 when I came in. The other interesting thing on that is the demographic was, I think our average age of client was 67, was pretty high, and we knew that was going to be an issue for us too. So we also actively worked on that and did products to lower that and to
on
get
on
us a
on
little
the
more
personal
sustainable.
side.
Yeah, on the personal side, absolutely.
So let's talk about that, because this is a very common issue that most community financial institutions are dealing with. This kind of aging, particularly on the deposit side.
Yeah,
And we've actually talked to some academics in the past that have kind of showed empirically that there's an increased risk that comes from institutions that kind of get out of whack from that standpoint. What did you do to kind of specifically address that as a strategy? I know you said products, but what did that look like from a day to day standpoint, from a mixed standpoint, like how you approached products, how you approached experience? Because I'm sure it wasn't baby steps. There was probably
no,
like some major effort involved in that.
you're absolutely right. We did not take baby steps at all. So I think the two biggest things we did is we got a branded rewards checking product, which they did the marketing. I didn't really have marketing, and I really didn't want to invest in marketing. I wanted to invest in the people, but we got that product, which that almost immediately had a very good effect on the demographic strain because it was a good product. It had we have a rewards component. We have a high interest rate. Like you can earn very good, if you're a consumer, you can earn very good returns on the various deposit accounts that we had in that product. So that was critical. I think the other really big thing was, it was less than a year after I was here, we put ITMs in and got rid of our drive-through lanes. Well, we didn't get rid of them. We repurposed them and we put interactive teller machines in the drive-through lanes. And we did, and I always tell people, we did have an advantage doing that because I think 5 out of our 8 branches had Diebold said, we will not service your tubes anymore. Like if you want to keep running it as a drive-through, you're gonna have to tear it out and like redo it. And so we thought, well, we knew we wanted to do the interactive ATMs, not because of the drive-through issue. It was just a happy circumstance. We wanted to do the interactive teller machines because it was a convenience play. So what we basically advertised it is sunrise to sunset. So you didn't have to, people in a traditional community bank, they're open, 9 to 4, say, or 9 to 5. Well, our ITMs are open 7 to 8, Monday through Friday, and I think it's 7 to 7 on Saturday. It's been so long, I don't even know if I'm quoting the hours, but it's a long time. So you could stop it if you want to have in-person, I say in-person service, because you are talking to a real person. You hardly have to plan going to the bank. Go on your way to work, on your way home from work. Like you don't have to plan it anymore. Like, I got to get to the bank by 4:00, which we thought was a very big convenience benefit, which it has turned out to be. And obviously we didn't have any idea that a pandemic was coming, but it really served us well during the pandemic too.
So what was the feedback from customers? Because I mean, the play like that usually is around acquisition, new customers. You're not necessarily playing to the convenience of your existing customers. You're looking for making it attractive to others. Did that really play out? And what was the feedback you got on that experience?
So we had we did get new customers from it because there are people who wanted to have in-person service. They wanted to talk to somebody. So we got new customers because of that. We had our business customers. These machines have capacity to take a lot more cash in than an ATM would. That was very good. And we really branded it and marketed it about like, we're here for experience, combined with the branded rewards checking. I think I can't attribute this to the ITM and that to the rewards checking, but I think combined. And surprisingly, many people were telling me, oh, well, your older customers will not like it. And that was absolutely untrue. We literally got into it about 90 days into it. We had to get them to program the ITM or turn on a feature that if you got there, it's like in a branch. If you ever go to a branch, sometimes you'll see 4 people in front of one teller, no one in front of the other 2, because they all like that one teller. It's the same on the ITM. They'd literally get me and say, hey, Dave, I'd like to work with Nancy. And I transfer them over. So that came into effect really quick, which that was really gratifying to us because that showed that it really truly felt like an in-person. And seniors were upset because they've been Skyping with their grandkids for years already. So Skype, yeah.
And how did that play internally with your own folks? Was that quickly embraced? Was there growing pains with it as far as, the people working on the other end?
Yeah. So we did Nancy Rosentrader, who's our chief operating officer, was our newly appointed in charge of retail shortly after I got here. And she did a masterful job of the rollout, first with the team, why it's going to work good, why it'll be good for them, and then how we are going to get our customers to adapt it. So we had ambassadors sitting out with the ITMs for weeks on end. The teller staff or the personal banking staff would take people out and show them the ITM. Like, we pushed it very, very hard. Every experience, we pushed people to try it. Not that they have to. We still have in-branch hours, but They and part of the reason for the team is they didn't like the doing the drive through anyways, right? Because sometimes they were only coming in for the drive through shift, so the branch closed at 4:30, and they were coming in for 2 hours, and so that we didn't really get much pushback on that, as much as you would have thought. But people always push back on change, Rich. It's absolute. You just know they're going to push back on change, but it went surprisingly well.
But not a lot of I guess growing pains around this, since it is a little bit different than, being a face to face teller or working in a call center. That experience of the empathy that's required to kind of really do that job well is
Yeah.
sometimes muted on that standpoint, or at least just being in a different form can kind of make it weird.
Yeah.
Did you experience any of that?
So we experienced very little of it, but it was mostly Rich because we hired a whole new crew. We didn't make our tellers who worked in branch didn't become ITM tellers. None of them did. We formed a whole new group to do it. And so we could train them on that, and they didn't know any better. In fact, I don't think any of them had ever been in banking. I think a lot of our ITM tellers, I think that's true today. This was their first job, and
So
they loved it.
So this is interesting. This aspect of what you've done here. So what's important then for that role? If you're kind of thinking of it, you can zoom all the way out to your overall strategy of what you're trying to do, and that culture you're trying to instill, to like the technical skills that are involved. But like, what makes a good ITM teller, somebody who's on the other end of that transaction? What is the difference between okay and really good in that role?
Yeah, it is. I'll tell you, the first thing is a super comfort with doing what we're doing right now. And that was 2016. And people were pretty comfortable then. But the folks who came in and did it, they were literally straight out of school. And so they were very comfortable with doing video discussions, how to interact with people. Like that wasn't an issue at all. And probably one growing pain we had is we had them in a room, and to do the ITM, you have to have a very short queue because we can't have people bobbing around and being too far. So it almost sets you in a position. And so that wasn't, people weren't always super excited about that, but it really was that it was brand new people to the industry, and they were very, very comfortable with being on video.
And probably closer to the type of customers that you're trying to primarily attract through this.
Yep.
Also, okay, all right.
Yeah.
Um, One thing I did want to ask about is you and we kind of got into the CNI part of your growth strategy. You launched a new commercial lending business unit last year. Tell us a little bit about that, like the impetus for it. What was the hard part, I guess, about pulling that off? But where that idea came from, that part of the story.
Yeah. So Oxford Commercial Finance, I think almost any banker would have some interest in doing asset-based lending and factoring, which is, we call it, that's commercial finance, and um, shortened down. It has very good yields if you have proper controls and you do it right. It's a very high profit business. So I'd always wanted to, but a lot of the expansion, Richard, we've done on my impetus is I don't want to do something unless I already know or have somebody who I think will be really good at it. So we happen to kind of kismet. There was a bank in Michigan, Crestmark Bank, that's all they did was basically things our Oxford Commercial Finance does. And they had been acquired a couple of years earlier, 2 or 3 years earlier, and a lot of them they had only worked. I mean, Crestmark was $1 billion bank and had grown up, so they had only worked in a small company, really community kind of company, and they didn't like working for the big company, and so many of their senior leaders there wanted to do something else. And so we hired a bunch of them all at the same time. And so that was super important. The The hard part is though, we were a startup and we did buy a company. I should back up. We bought a company, Factor Southwest, it was located in Phoenix, run by Robin Barrett, who's the owner, and Robin was very, very good at the business, and she's a CPA. She was good all the way around on it. So we kind of got that as our base. It wasn't a big deal. I think at the time that was 25 million in assets, but that gave us that little base to do the startup on, and then we just hired people in and started building out the product set. And it really is get back to controls, controls, controls. you you can do it very successfully. If you don't have proper controls, it'll be the worst thing you ever did. And so,
So do you focus on any particular industries or type of assets that you go after? Is there a narrow definition, or is this kind of more a generic marketing play? Because you are nationwide, right? On
yeah,
the okay.
yeah, we do that nationally. So most of the commercial finance assets, the focus from a collateral standpoint is accounts receivable and inventory secondarily. So it's not that different from what we might do in a CNI and conventionally. But the companies who are using that, they might be a startup, they might be a fast grower, so their leverage is off the charts, or they might have had a problem. All three of those are really a customer set. And why we wanted to get into it, really, forget the yields and the financial benefits. We always have wanted to have a one-stop shop. So you call us, or you're a CPA, you're an attorney, you don't have to think about calling anybody else. We will have a solution for you. And we were always trying to figure out how to do it. Of course, we used, other asset-based lenders and so forth, but it really didn't work because we wanted to be able to do the life cycle with them. So company starts, it's not going to get conventional bank financing, unlikely to. You can do factoring. You keep growing. At some point, you'll become an asset-based, and then you can become a conventional customer. And we have people now, we've only been doing it 2 years, that in the asset-based lending side, they're about to go to conventional. And the problem when you're just a commercial finance shop is you just lose them because you don't have a conventional product. Well, that's kind of our strength. So we can easily transition. So they go through all the financing channels all in one place. Don't have to change their account. And it also helps people on the other end. We might have some conventional people who get into have some trouble. Instead of having to go do a workout and kick them out, our commercial finance in many cases can help them and keep them as a customer. So that was the overriding thing, is we wanted to be a one-stop shop for small and
So
mid-sized
liquidity across the life cycle of that type of customer. Okay.
Exactly. Yeah.
So for an institution that's been around since 1884, right, 140 years, obviously have seen a lot of stuff, and even in your short time there, has gone through a couple of different cycles. Where do you see it going forward from here? From from your bank, from the market that you're going after, what are really the important elements or market forces, or the part of your strategy that you think are kind of to the forefront that are really going to give you that differentiation and kind of help you going forward?
Yeah, the pat answer, of course, is technology, but it really is the case. We have to constantly figure out how to add more value to our customers. Cybersecurity is a really big issue, and it's becoming a bigger issue for our small and mid-sized businesses. What can we do with our customers? Maybe package up some cybersecurity education, employee training into one account. But it is things like that. Should we have an HR system, not us doing it, but partnering with a fintech that we can offer as part of an account package? So I do think the future is going to be very much about us being able to create some valuable products or product bundles for people. I think the other is how you go about getting them and get customers. That has continued to change. I think artificial intelligence is going to play a big role in that. we look at a ton of products all the time, Rich, because we need to know what's going on out there. And you can even see now there are definite products that you could that to market with that you could do with AI. They're in their infancy though, so don't get me wrong, we're not running out and doing that, but I think that will be a big change. And I still think your small businesses need some handholding. And I think you would, for a company like us, our reason for existence is we can do that. We can actually do a relationship with people. We can actually help them. We're never ever going to be the cheapest out there, and we don't make any bones about it. But we can definitely do a relationship with somebody. And I think technology plays a role in that too, because if you don't, you need to have insights into your customers that it's not good enough for, a relationship manager there and to try to make up insights. You got to be able to get at your data. You have to be able to use some predictive models to figure out what should we be doing. I mean, I think in the end, we can know our customers better than we've ever known them using technology and the relationship. And then your offers, it's back to when I first started there and went in and they said, you want a credit card? We should never, ever have to do that. We should go and say, hey, I see this. Have you thought about this? I see you write a lot of checks. Do you need to write checks? You ever think about using a purchasing card?
Mm-hmm. Yeah, the very insightful, particularly about the what other services that maybe aren't traditional banking services, do you have maybe not the ability today, but the right to be able to offer and sell into your customers, and also on the consumer side as well. Well, Dave, this is a really interesting story. Thank you very much for coming on and sharing with us. Again, congratulations on being part of a 140-year legacy at this point. If anybody's interested in learning more about Oxford Bank or about you, where can they go for more information?
Well, we have a very robust website on it, www.oxfordbank.com. I'm just looking over because I've got it all marked forever. But yeah, we and I look at that. That's very good. You can call us. We're love to talk to people.
And we'll put links to that in the show notes. Yeah. Dave, thanks again. Thank you very much for sharing.
Rich, thanks so much for having me. I really enjoyed it. It was a real pleasure talking to you.